What's going on, everybody? This is Black Men Sundays. I'm your host, Corie Murray, and we're talking about generational wealth, mental health, finance, and business.
It's a Black Man Sunday. Time to put all childish things away. I refuse to be the man I was yesterday. Gotta put my best foot forward and elevate.
And today we have Javier. He's a vice president and lending market leader with Bank of America of Central Florida. He's also helped people for the past 20 years, helping them with their mortgages. So we're definitely going to get to that. So Javier, welcome to Black Men Sundays. How you doing?
I'm very good. Good afternoon. Happy Sunday.
Happy Sunday. So, I want to get right to it. Like I said, you're the vice president and lending market leader with Bank of America. So, with the home buying demand today, there's a lot of challenges. I hear people say, I want to buy a house. I have 10 to 15,000 saved up, but ooh, with the mortgage and with the insurance, it's too high. Then I hear people on the flip side that say, well, I'm already in a house. I don't know if it's fool's gold for me to sell my house because if I've been in the house pre 2020, I made some money. But if I sell it and buy a new house, I'm going to get a smaller property, smaller square foot. So let's talk about the home buying demand where we are right now.
Thank you for the opportunity. And before we get into the details, let me disclose to you my license number. NMLS number is 291135. So Corie, it's super important that we can all understand what is going on in the market. We are in a unique time in history. It's where coming out of the pandemic, what everything that happened with the economy, where the values of the properties are now, and the lack of education, the lack of understanding. And we here in Bank of America, we are not just lenders, so we are also a research institution, and we actually work on an annual basis on the Buyers Insights report. It's actually going to give us the insights of what's going on, what's the people thinking, what are the fears, and where we can actually use our power to actually bring those benefits to our communities. And you are absolutely right. Many people, they are afraid, and it's actually on the report. They don't have the knowledge. They might feel that they don't have the guidance. They don't have somebody to hold their hands. Maybe they don't trust the people around them, and the fear is out there. They only hearing high interest rates, higher values of the properties, people from outside the state buying in cash, and that competition. And when you build all that up, if people are just staying away from the home buying process, and what is sad about it, and they keep that rental process, that it should be something that is temporary, that you need to go through that rental process. It is normal. You need to be there 2, 3, 4 years, but eventually you need to move into the home buyer process and become a homeowner. But that you mentioned, that fear, lack of knowledge, lack of a good advisor right next to you, somebody that you can trust, that all of that is actually keeping people away from it.
And let's talk about the home buying demand today, because when I bought my house in 2017, everything was just selling quickly. People were paying with cash. I've gone through that a few times. People were paying with cash, but then once we were able to get a house that we got, we paid a little high for it. But then over the years, we're like, well, we know we're doing pretty well. So as far as from a home buying perspective for the new buyers, based on the home buying demand today, especially in Central Florida, what advice would you give for the people that say, okay, well, I'm renting, but I have some money, but I'm not sure if I should wait a few more years and let the market come down, or should I get in it now?
That's the thing. We don't know what's going to happen with the future. Not even the experts can actually have a prediction, an accurate forecast of what's going to happen in the future. So as I always tell everybody that asks me the same question, it could be my family, my friends, clients, friends of my clients, whoever. The best time to buy a home is going to be whenever you are ready to buy a home. I've been doing mortgages for a little bit more than 20 years. So actually 24 years coming in this year. And back then, when I'm thinking about what the rates were back then, when I first bought my first home, actually was back in 2004, it was already like 8% interest rate. And when I started in the business, the interest rate was something around 9% interest rate, 10% interest rate. And in so many other cases, we were lending up to 11%, 12%. If we go even back in history and we talk about the 90s and the 80s, the rates that our parents actually paid to buy a home, it was actually way higher than that. So nobody actually was stopped from the goal and the stability and the and everything that home ownership brings into the conversation, because rates might be high. Oh, well, yeah, we got to think about what happened a couple of years ago, right? When the rates actually went down to 3%, 2 point something. Well, I'll be honest with you. I don't think we will ever go back to something like that. It might happen again. Nobody knows what's going to happen in the future. But what we need to make and realize here is the interest rate actually goes into a secondary level on the priority list. And we need to make up our minds on home ownership is the goal. Regardless of what it takes, what the rates are available, the home ownership is a bigger goal. And we need to think about everything that takes from the home buyer perspective to actually make them ready to actually be available to compete in the market, find a place, actually pay for the fair price, and actually make that happen. So many things going on. So we need to make everybody understand that credit takes a big piece of it. Credit history, credit score, how much of your debts in your current debts are actually maxed out, and how many debts do you currently have, how you can actually prepare to have whatever that monthly payment is going to be for home ownership, which might be same or maybe lower than the lease payment that you are currently paying now, how we're going to accommodate that so you can have a balanced life, a quality life. So and this is something that many lenders are going to be looking for. We will not approve a loan that we know that the buyer is not going to be able to afford, because we don't want to strangle anybody financially. People need to understand that once you are able to put your hands in your monthly payment, you need to find that balance where this is the amount of debt that you're going to get it on a monthly basis, and this is how much money you're going to have left for everything else that makes life good and you have a quality of life, vacation, a good grocery purchase, and time to just go to the movies and maybe go out to a restaurant. All the great things that actually add value to your life, you got to be able to achieve it, but you need to understand what's going to be that max. So that's going to be credit history, income, how much income you're going to have there, how much income you can use to qualify for the loan. And the other piece that you mentioned is going to be the savings. So we might find, or there are available many sources for down payment assistance or maybe closing cost grants. And we can talk a little bit more about that later to go into the details. But beside all the help that we can find, there's always going to be the need from the buyer to actually have not only some source of funds to actually cover for the some of the expenses of the buying process, but at the same time, it is actually healthy to have some kind of funds, so that way you can actually move into that home and work with whatever is spending. Maybe the color of the master bedroom doesn't fit your wife's preferences, so you got to be ready to paint the house, maybe change the carpet, maybe new furniture, maybe a new barbecue grill. So whatever it is always healthy to have some savings right next to you.
Oh, that's great information. And let's talk about for the sellers or the people that are already in a home that are thinking, okay, should I invest in another property, another residential property that is, or should I sell this because I know I'll make at least 200% and buy something new? Is that fool's gold, or what should and then my last part of that question, I know I'm packing it on you. A lot of people are saying, okay, well, when I got my house, I'm still paying PMI on it, but I'm afraid to refinance because I may have had a 3.2 rate. Now, if I refinance, it'll be 8%, but I still have to pay the PMI. So what advice would you give for those customers?
So let's take that, the first piece of the question. So on the seller side, you're absolutely right. So every single property, we're not going to say every single one, but the vast majorities of the properties here in Central Florida, they do have equity on their homes. So as you said, maybe 200%, maybe 150%. You do have equity on your home. So what do you do with that equity now? So that's very, very case by case analysis that we need to make here. But let's say that you bought your home at $400,000 3 years ago. Maybe the value of that property now is $600,000. So you think about it, based on whatever you put down and the amortization of that mortgage, now the balance of that mortgage maybe is down to $360,000. So now you're thinking about your equity. You do have $240,000 in equity there. That's a lot of money. And that's something that only homeownership brings to the normal people like us. Where do we come with wealth? Wealth is going to come from the home ownership and the additional value that our homes are getting. Now, what do you do with it? Well, you said it right. You can sell it today and get those $240,000 in your pocket right away. But where are you going to go? Because if every property in Central Florida is actually higher value, maybe if you trade and you do a lateral move, you're going to end up in the same property that you have now with the same size and maybe the same location, but you're going to pay $600,000 for it. So maybe the trading there is not going to see that much value to actually cash out the $240,000. It will only make sense if you can actually trade off for something different. So let's say that you have a townhome and now you have, I don't know, maybe 1,800 square feet. And now you need a bigger house because you actually have a bigger family now. So in that case, cash out, take the $240,000, move to your next home, and whatever that value is going to be, you actually made that trade in with a lot of cash in your pocket. But just to do it to cash out money, I don't know if that will make way more sense as if you are forced to do it because you need a bigger home, or maybe you need to downsize. Maybe you need a smaller home because now you're an empty nester. Now your kids are in college, grown-ups, they are not with you. What do you do with a 2,800 square feet home? Maybe you don't need that much now. Trade it in, trade off, get a smaller house, get that cash in your pocket. Now, thinking about the people who already have a 3% interest rate, and you mentioned very well, the private mortgage insurance is going to take effect every single time that your balance is actually over that 80% of the sales price of the property. There are a few exceptions, but in the vast majority, it's going to happen every single time. That private mortgage insurance is going to take place for the first maybe 7, 8, 10 years of your life, of the life of the mortgage. After that, you might get rid of it, and you will get rid of it eventually. Now, trading that in, like trying to sell the property just to get rid of the PMI, if you can actually put more than 20% down on the next purchase, you're going to get rid of the mortgage insurance. You will not see the mortgage insurance in there. Will you lose the 3% interest rate that you have now on your mortgage? Absolutely. You're going to lose it. But again, case by case, we need to see everyone's goals. Every single person is different, Corie. I had so many mortgages conversations in my 24 years of experience, and there is not even one mortgage transaction that is the same as the other one. Every single life is different. Every single person has different necessities. And that's the value that an advisor is going to bring into the conversation, to actually go deeper into it, understand what do you need, what you're looking for, so that way you can have the right guidance.
Well, that's great information. And then I think the last part of the PMI question, if I'm not selling the house, but because from my experiences, and when I've spoken to experts, like you said, you have to pay 80% of the loan down to get rid of PMI. But then to get rid of PMI, you have to refinance. It's not like it just drops off once you hit 80%. But then the issue is, well, I want to stay in my house. I don't want to pay the PMI every month, but when I refinance, I don't want to pay the 8% either. So is it just at that point, if you're in that situation where you got a 3.2% rate, they're saying, okay, we'll refinance and bring your mortgage down, but because you're getting rid of the PMI, but because of the interest rate, you're going to pay a little bit more. Is it better to just sit on the PMI and, hope for the rate to go down, or like, what's your advice on that?
There is a process where you can actually get rid of the private mortgage insurance directly with your servicing company. I cannot tell you like in general terms, this is what's going to happen because actually every single loan is different and every investor has different rules too, and every servicer too. So if you, just to give you a general example, if you have been on your home for more than 3 years and you have not missed a payment and everything has been done the right way, and the value of the property today is actually over that 78% threshold loan to value, you can get rid of the mortgage insurance. There is a possibility that you can actually get rid of the mortgage insurance. So the servicing company will put you in the process. You might need to do an appraisal on the property. They might need to review your payment history. It's going to be a process. And then eventually they will make a decision if they will remove you from the PMI or not. But again, that's a very general. I want you, every single one of you listening to this podcast, and you want to know about your possibilities, you need to reach out to your servicing company and ask the questions how you can be eligible to remove the private mortgage insurance.
And that's great information because I always like to clear that up because, I hear some people say as long as it's at 80% below, you can get rid of it. But then I've heard people say, well, you can get rid of it, but you have to refinance. So thanks for the clarification on that. And what I want to talk to you about now is in looking at your biography, it says that you have powerful digital tools and home loan options, whether you're in a new home or you want to do some upgrades with Bank of America. So let's talk about, first off, but before you answer that question, I kind of want to take it back a little bit because I feel like we're kind of just locked into the business. But let's talk about you for a minute. How did you become the vice president and lending market leader with Bank of America, Central Florida?
Well, as I mentioned before, I have been doing mortgages for a very long time. So I started back in the year 2000, so 24 years so far. I come from Puerto Rico, so back there, I used to work for basically the biggest bank in mortgages back in the island. So actually, it was my brother-in-law who actually told me back then, like, this is a very interesting world. So shout out to Ricardo, who actually brought me into this industry 24 years ago. So once we started there, I actually got the basics on how to be a financial center loan officer. And once you are able to understand, and I think this is going to work for every single career out there. If you understand what it takes to be a successful advisor to your clients, regardless of what the career is. You can be an attorney, you can be a plumber, you can be a mortgage loan officer, whatever it is. If you do understand everything that happens on the client's mind and what actually is what they want, and you actually drive that based on the client's perspective, you're going to be successful. So I was very lucky to actually go through the opportunities to become a leader back then in Puerto Rico. Then eventually I moved after the economic crisis. I took an opportunity in a credit union, and then there I was also able to lead a group and lead the mortgages. So in 2014, actually Bank of America got hands on my resume, and they invited me to become a financial center loan officer here in Orlando. So again, I apply everything. So going back again into the financial center loan officer role, and taking care of the client, so people can actually see what the value that you bring into the relationships with clients. And I got the opportunity to actually climb up and had the opportunity to lead teams here in Orlando. So again, taking that perspective as a Latino Spanish speaker coming from Puerto Rico, no relationships, no nothing, right there in the middle of Central Florida. And again, I think honest work and dedication actually brings good results. So I am a pure evidence that actually hard work and taking care of your clients can actually lead you to good places.
Oh, that's great information. Now let's get back to it. So with Bank of America, you guys have powerful digital tools. Let's talk about some of those.
So here with Bank of America, and I don't want to sound like a commercial, but the great thing is that we do have the tools to actually make that process so transparent to our clients when they are going through a transaction. So whatever the home loans need is, here in Bank of America, we can provide not just the right guidance because of the people that we have inside the financial centers, all across the financial centers here in Central Florida, but the tools that actually make the process transparent is a great tool. So you will see exactly what's going on since the day that actually the loan officer completed the application. They put it through the process. As a client, you can actually see everything that is going on through there. So it might be from the first step about submitting documents, seeing what the appraisal is and everything in between until the day of closing. Now, the other piece of tool and technology that we do have in place is going to be the educational piece of it. So way before we get into the process and how to board an application and submit your pay stubs and everything in between is what we can do to educate you on what a healthy financial life is going to be. And that's going to be with better money habits. Better money habits. So it's actually bettermoneyhabits.com. I encourage everybody to go there. It doesn't matter what you want in life, if you want to become a homeowner or not, if you want to become a homeowner next week, or you want to become a homeowner in 5 years, bettermoneyhabits.com is going to provide you with all the information that you need to actually be healthy on the financial side. We can also provide you with a lot of sales data through the Bank of America Real Estate Center. So the Bank of America Real Estate Center is going to show you all the properties that are available on sale, and you can see the description of the properties, how much they are asking for it, who the real estate agents are. There's a lot of information about it. The next one that I'm going to provide you is the Bank of America Down Payment Center. The Bank of America Down Payment Center is going to bring you all the information that is available around the area that you're looking for. And we're going to show you what else is available there for down payment assistance, which it could be from the county, it could be from the city, it could be from the state, or it can come from the federal level, or it could be nonprofit organizations. So all of the 5 sources for down payment assistance, you can find it there at the Bank of America Down Payment Assistance Center. And the last one that I'm going to mention to you is going to be included there is going to be the down payment and closing cost assistance coming from Bank of America itself. So Bank of America does provide down payment assistance and closing costs, which you can actually find it there too for your education.
Oh yeah, that's great information. Because when I was looking at your bio, I said powerful digital tools. I wonder what that's about. We've had CEOs and VPs of other banks come on. So what separates Bank of America from other banks as far as from a lending perspective?
Right. So we do have a very good thing that actually is the question that we ask every single time, and it's what do you want the power to do? And that is a question that we actually ask people like you, Corie, our clients, and everybody, including non-clients. What do you want the power to do? And I think Bank of America has a huge commitment on helping the community in every single way. But just speaking about the home lending itself, I think it is very important to understand how Bank of America has made the decision to actually put the grants available for our clients so actually they can become a homeowner. So we're talking about the down payment assistance. We can actually give you up to $10,000 for down payment, which is going to be equal to 3% of the sales price of the property. So 3% up to $10,000. And this is money that is coming directly from Bank of America. So this is not a lien. There is no going to be any lien on the property. This doesn't need to be paid back. So when you put that grant, the grant definition is this is money given away by Bank of America, no repayment required. And the second piece is going to be the closing cost grant, which we call the America's Home Grant. America's Home Grant can actually give you up to $7,500 to pay for the closing costs of your mortgage transaction. And we're not going to leave leftovers there. If your total amount of closing costs, let's say, for example, that actually rounds up to $5,000, whatever left over is there, we're going to use it to buy down the rate. So again, another grant that there is no repayment and nothing to be paid back and no liens on the property. So you don't need to be a first-time home buyer for this. You just need to be a primary home transaction borrower.
If I already own a home and I want to get a second home, live in it for a year, but make it residential. But let's say I want to make it a business, an investment property. So do you guys offer, like you said, up to 10,000 and the 7,500 closing costs? What about if I want a business property or an investment property? How do you guys take care of that?
Yeah. So the both of the grants that we already mentioned are exclusively for your primary home transaction. So we will not be able to use those, not for an investment property, which is going to be the property that you are not going to occupy, that maybe you're going to use it for Airbnb, vacational rentals, or maybe just a full-time long-term rental. Or it could be you can actually purchase a home for a second home. So a second home is going to be defined as that property that you will go there on the weekends, or maybe you go there for vacation. So none of those are going to be recipients of the grants that we have available. Those grants are destined only to help our community to actually become a homeowner and have their home. So exclusively for the primary home transaction. So we want to use those grants to actually deliver home ownership. But for the business side and having a rental property or a second home to go on vacation, we will not be able to deliver grants on that. Now, thinking about the digital tools, there is another powerful tool that I want to make sure everybody is aware of. Is going to be the way that you can complete an application. So we have the digital mortgage experience, which actually allows you to complete the whole application, the data entry piece of it. And then after that, our advisor is going to take over, and then we can actually engage with the client at that time. So just thinking about the power or the differences between a Bank of America and all the other lenders. So that's going to be the opportunity with the grants and how much we do have available to deliver homeownership through our communities. The big name of Bank of America and the power that brings, that actually is available because a Bank of America institution is here. And we do have the local experience, that face-to-face interaction with the advisors that we have in the financial center. We actually have about 20 loan officers, which we call credit solution advisors, located in a specific financial centers across Orlando. So that's when you can have that experience of having a face-to-face conversation, shake hands, guide me through this process. It could be, again, to become a homeowner next week, or it could be to become a homeowner in 2 years. But our advisors are going to be there to guide you through the whole process.
I must be honest with you. I was down in my kitchen this morning having some coffee. My wife was like, I kind of want a new kitchen. I went to our friend's house. They have the hibachi, skillet stove and all that. And she was like, I kind of want that. And I want to upgrade, our current house. I don't want to sell it because I love our house. We have a bunch of, kids and a lot of school teachers in my neighborhood. But she's like, as far as home loan options, and I want to update my home, what can you guys do for me?
Well, and you said it right when we talk at the beginning. You have been a homeowner for more than 2 years. So you do have equity on your home, Corie. You do have equity there, and we can actually use it in so many great ways. So we do have a product, and again, this is available through many other lenders too. But we call it the home equity line of credit. So a home equity line of credit is actually going to give you that amount of equity in a line of credit where you can actually draw money out of it and use it for the purpose that you already mentioned: home improvements, debt consolidation, other investments, future cash needs. There are endless usage to the equity that you have there. So the home equity line of credit is going to give you access to it, so that way you can pull money out of it. Now, the great thing about Bank of America home equity line of credit is that there are no application fees. So you can actually apply for free. There are no closing costs. So we pay for all the closing costs. All the closing costs regarding that transaction, like inscribing, registering that lien on the government and everything that in between, we will pay for it. So you will have it available there. And I actually recommend every single homeowner that do have equity, like it's going to be almost everybody do have equity now, have a home equity line of credit. That's going to give you that peace of mind at night that if anything happens in the future, you will have a safety net. It's a financial safety net there that if you need to pull $20,000 tomorrow in the morning, you will have that home equity line of credit to go there, pull it out, and use it. And again, there are no closing costs, nothing about it to pay upfront. Once you go through the process, you have it open, you leave it there. It's going to be available in your application, in your mobile app. And whenever you need the money, you transfer that money. And that's when the monthly payments are going to start, whenever you pull money out of it. As I tell many of our clients, hopefully you never need it. Hopefully you don't need to pull any money out of it. But just keeping that available there as a safety net is very smart to do in these days.
Okay. Okay. Bank of America. I like that. No closing costs. Cause we've been looking around a little bit and there's been closing costs associated with getting our home equity line of credit. And I kind of want to stay there for a second because I feel like there's some miseducation on the HELOC. We call it the HELOC, home equity line of credit. I hear people say, okay, I have $200,000. I want to get a new pool. The pool's 150. They're thinking, okay, I'm gonna just take the 150 out. But again, the way I look at a HELOC is basically like you're financing the equity in the house, meaning it's not free money. So if I have $200,000 in equity and I spend 150, okay, I'm good. I have 50,000 left. It doesn't work like that. It works like the way I always look at it is if I borrow 150 off my home equity line of credit, I'm basically paying a monthly to pay for that. So let's clarify that because some people think, a HELOC is one thing. And I'm like, no, that's not how it works. It's not like if I have 200,000 bucks and I spend 150, I have 50,000 left. So let's clarify that, please.
So it's absolutely another lien on the property. So going back into what I was saying, if you don't pull money out of it, you never pay a dime and it's going to be in sleeping mode there. But the day that you pull that $150,000 out of the home equity line of credit, now you will have a monthly payment based and calculated on the $150,000 that you pull. So you need to, of course, we're going to make that analysis when we approve the home equity line of credit. So we need to know that you are capable and you do have the income to actually support the payments for an additional $200,000 that you might be able to pull at any given time. So yes, so you will have a principal and interest monthly payment calculated as if it is a 30-year loan. So if you never pay any additional money to that principal, it will take you 30 years to pay it off. So, but again, you make that decision. So, and at the same way as a first mortgage, we don't have any prepayment penalty on our loans. So you are free to actually pay additional money to the principal. So you can do partial payments of the principal, or you can pay it off completely at any given time. So if you do have the opportunity to put additional money to the principal, go for it. So that's another way of helping our community on being smart about how mortgages works. So that way you are not going to be stuck with that mortgage for the lifelong of 30 years. And this is a very interesting piece that everybody should know. Going very quickly back to mortgages. If you pay one monthly payment a year to the principal of your mortgage, that 30-year loan, you will pay it off in 24 years. You will get rid of 6 years of interest if you are able to put to the principal one monthly, the equivalent of one monthly payment to the principal. So the same way it works with the home equity line of credit. If you are, your minimum monthly payment is going to be like a 30-year loan. But if you are able to actually put additional money to the principal, you will pay it off quicker, way quicker.
Definitely. Yeah. And I've heard that before. I think my grandfather does that. He pays one extra mortgage payment every year. And, he's been knocking it down. All right, cool. Well, fellas, the stage is open. We have John Javier, VP and lending market leader with Bank of America on the line. Let's go.
I'm Ray Simmons. I'm calling out of Rockledge, Florida. And I just got two separate questions for you, but that I wrote down. The first question was in regards to AI, of course. So how is Bank of America evolving its approach to customer service in the era of digital banking and AI? Like, what do you guys have in the pipeline that you're aware of, if you can answer that?
Right. So we actually have a great tool that is actually called Erica. And Erica is based on AI. So once you are a Bank of America client and you are actually using the Bank of America application as your digital tool to actually transact and do everything that you do on your daily basis regarding checking, savings, and everything else. Erica is actually AI developed AI, and it's actually a great tool when you can actually go to, hey, Erica, help me with X or Y. And actually, Erica is a very, very interesting tool to use. It can actually give you analysis of your expenses. It can be very transactional too, about find me this amount, where I spend that money, which day. So it's a great tool. So again, Bank of America has done a phenomenal job with investing in technology. And again, the same way that we have been a research institution for all the great things as the Buyer Insight report, there's a lot of technology in place. Thanks for everything that Bank of America has done with the technology opportunities that are out there.
Right. Awesome. Great. Thank you for answering that. Yeah, I have a business account with Bank of America as well. So I got to play around with the app a little bit and use Erica maybe a little. But thanks for answering that. And
hey, reach out to me. I'll be happy to connect you with one of our business bankers, so that way they can get you through all the other benefits like Erica that you might be missing.
Sure. Yeah, I'm sure I'm missing out on a few features there. Thank you for that. And my second question was regarding like community engagement. Like, could you discuss some of the community engagement projects Bank of America is involved in, and the impact it has had that you're aware of, sir?
Oh yeah. So that's again going back to the what do you want the power to do? So Bank of America has been involved in every community where we do have the presence. So I'm extremely happy to be part of Bank of America and the commitment that every single market has in the community. So thinking about Rockledge, so our market president there, Peter Menino, is extremely involved with the community and everything that we have done there, not only with Habitat for Humanity, the same way with Orlando, with our market president here, Mr. Navi Shuha. So everybody's so involved with the community at this time. Habitat for Humanity, a Second Harvest here in Orlando, and of course I'm missing 20 more names, but the impact and the time that Bank of America employees from top leadership all the way down to the financial center staff, the time that we invest in our communities with volunteer time and the funds and grants that we put in the nonprofit organization hands is massive. Is massive, and there's a lot of data and information about it. So, but there is so much impact there and so much details there that you will be very proud to be a Bank of America customer because of all the things that Bank of America does, not just taking care of you as a client, but taking care of the community too.
Outstanding, absolutely. Thank you so much for answering that question. And I thought of one question while you were talking, if I may ask just one more. So, in regards to like the global markets, right? So I'm a trader, an investor as well, and you guys just had earnings last week, and you had a great earnings. So congratulations on that, first of all. But my question, that last question I have, was with the global markets. You guys have a strategy for growth in international markets by chance, and if you do, if you're aware of, are there any specific regions or areas that you guys are targeting?
Well, I don't have the details on that global market. I do know that's a big piece of Bank of America. So I think one of the pillars in Bank of America is actually responsible growth. So yes, indeed, we are looking for that growth, but we're going to make it happen in a responsible way. And that's going to happen in every single line of business that we are, and that's including global markets. So I know Bank of America has a huge presence in the global market. So yes, that's something that I can actually find out more details about it. And Corie, maybe I can share that with you. So we got there two pieces that I want to share with you. And global markets is going to be one of them.
Yeah. How you doing? My name is Gary Johnson. I was just my question basically was really brief. As far as the process of the home equity line of credit, basically for the refinancing or trying to basically, if you're trying to get improvements on your home, or if you're trying to basically pull that additional loan, what's the normal process for that? Like, does it take like a couple of years? Like I've owned my home for about 4 years now, but does it take like 2 or 3 years before you can even get into that process, or is it something that can be done within a few months after purchasing a home, or what's the process basically of how that whole thing goes about?
So thank you, Gary. That's a great question. So it will depend. It's case by case. So you can actually do a home equity line of credit the day after that you actually bought the home. But that's going to be only in the case that you bought the home cash and you do have all that equity there. So during the first year of your home ownership, we're going to use acquisition cost, whatever price you pay for the home. So if you do have equity based on the acquisition cost, yes, we can actually do a home equity line of credit right away. Now, if you need to use the actual value of the property, you need to be the owner of the home for at least a year. After 1 year, I'm going to use the actual value of the property and I'm going to forget about the acquisition cost, what the price that you pay for it. So it will depend on where are you, but if you have been an owner of your home for 4 years, oh yeah, you have been eligible to do a home equity line of credit long time ago. So think about in 4 years, what has happened with that mortgage. Every single time that you make a payment, that balance is going to go down. That's actually amortization. And then the value of the property goes up. So the bigger that gap is, amortizing and value going up, that's the equity there. And you can actually use that equity to open a home equity line of credit.
Okay, sounds good. Sounds good. Thank you. I appreciate that.
I just wanted to backtrack real quick, John. When in regards to the line of credit you were speaking of, how's the percentages and the rates work for a line of credit like that? Is it something that's fixed, or is it over? Can you go into detail with that?
Absolutely. Yeah, absolutely. So there are multiple ways of doing it. So if you can do a variable rate or you can fix the rate, right? So if you go with the variable option, we're going to use an index. And the index that we're going to use is going to be the Wall Street Journal Index. So whatever the Wall Street Journal Index is, you're going to have a margin, or you're going to have something over whatever that index is, and that's going to be fixed. So you can say whatever number. So whatever number that is going to be fixed over the Wall Street Journal Index. So whatever that index is, your rate is going to be the result of that, which again, it could be something over the Wall Street Journal Index, or it could be something below the Wall Street Journal Index. So it will depend on so many other things to calculate there, like equity, credit, relationship, and so many other things. Now, if you go with the fixed rate, then the fixed rate is going to be whatever fixed is going to be, and then it's going to be fixed for the whole term of the 30 years.
Is it balanced along with what the interest rates are now, or is it?
Well, yeah, but it's not the same as a first mortgage. So if you compare the interest rate of a first lien, so then we can speak a little bit about the technology, the technical terminology of mortgages. So you got a first mortgage. That's going to be the loan that you use to buy a home, right? Or maybe that can be a refinance too. So it's always going to be the first lien, first position in the home. Whatever goes on the second place, normally it's going to be a higher price loan because it doesn't have the same position as the first mortgage. So that interest rate on the second lien as the home equity line of credit is normally going to be higher than the first mortgage. But again, there are anomalies out there. So there are clients there with a very high interest rate on the first mortgage, and the home equity line of credit might be below, but that will be an anomaly. That will not be the norm.
Awesome. Thank you for answering that question as well.
Are you enjoying yourself on Black Men Sundays?
I'm having fun. I can do this, I don't know, maybe on a weekly basis.
Oh, that sounds good. We may have to work something out. So before I let you get out of here, I have like 2 more questions for you. I'm a new business owner with Black Men Sundays. We've been a business for a full year. We've been a podcast for 3 years, but we've been a business for a year. We do turkey drives. We do different community initiatives, just like Bank of America does. But, and I have a Bank of America personal account, but I'm trying to now, like I said, I'm 1 year with my business, and I would like to establish a business relationship, a business checking account with Bank of America. So can you just tell me and our listeners, because a lot of our listeners are entrepreneurs as well. So what qualifications do we need if we're a new business starting out? Because I've had a guest come on, a couple of weeks ago said, they're still going to look at your personal credit because your business credit isn't fully established enough. So that's a two-part question. Like, what qualifications do I need to establish this business relationship? Because the one thing I hate is rejection. I want to make sure that all my ducks are in a row, everything's lined up. So I know I'm in good shape. I'm walking out of there confidently. And then on the flip side, if my business has been booming for some years and I want to establish a business checking account with you guys, would you guys just look at the business at that point, or do you still look at the personal?
So all of that business conversation, we do have the perfect bankers available there to actually answer all the questions. So this is the great thing. Again, going back into what do you want the power to do? Here in Bank of America, inside our financial centers, we normally have all the pieces of line of business available inside a financial center to actually provide you with the right advisory. So for the business piece of it, we do have two officers who can actually help you with that. Inside a financial center, we do have a business solution advisor. And outside the financial center, we have the small business consultant, a small business banker, I meant to say. So either of those can actually be able to help you and provide you with the advisory. With the same way as home loans, it is not a no. Every single time that we have a decline conversation for whatever reason, I might be having a conversation with you today and you want to become a homeowner, and maybe there is something on your credit that's stopping you from becoming a homeowner today. It is just today that you cannot become a homeowner, but you will become a homeowner in the near future. The same way that we can help you with that small business solution, whatever you're looking for, it might not be today, but we are going to help you and we're going to guide you through that. And that's why the advisors are in the financial center. So we can hold your hand, provide the advisory, and eventually we're going to deliver that benefit to you. Even on the home lending side, even on the small business side, yes, we do have the staff inside the financial center to provide it with advisory. So I encourage you to go into a financial center. You will find there our business solution advisors, our credit solution advisors who can actually help you in whatever life goal you do have in mind.
I got you. But again, like I was asking though, like if I'm a new business, are you, to establish this business, whether it's a credit card or a new business checking account, you guys are looking at the personal credit as well?
Well, and again, I don't have the whole details about the small business side. That's why I'm encouraging you to go into a financial center and get with the BSA or the SBB. But if it is to establish a business, of course, you got to put your credit there available to actually secure it. Because if there is not a business established, there is no track record of what you can actually do. But many of our clients, yes, they come into a financial center to have a credit card for the business, auto loans for the business. It could be a fleet. There are so many tools available out there here in Bank of America for all the small business owners out there.
Okay, great information. Yeah, because I was talking to the wife, she wants to get a new kitchen. I'm like, I'd rather use that home equity line of credit. I kind of want a boat. She was like, no, that's a bad move. So I was going to say, and then I'll let you get out of here. So as far as the home equity line of credits, from your experiences, what are bad decisions that people make when they use their home equity line of credit? Like, what are some, obviously we know to repair and upgrade the house is a good thing, but what are some, but I feel like I've seen people buy cars, boats, and all kinds of crap. So I'm just saying, like, from a professional perspective, from a VP of Bank of America, what are some bad ways of using that home equity line of credit?
Well, I'm going to start with what the regulation said. So there are rules that actually will stop you from using the home equity line of credit for a use like for a business. You cannot use that home equity line of credit to open a business or to invest in your business. If it is a personal transaction on your personal home, on your primary home, yeah, you cannot use that for business. The other regulation is going to be based on stocks. So you should not be buying Bank of America stocks with a home equity line of credit that Bank of America offered you. So that's another regulation stop there. So going into what's going to be a good decision or a bad decision, I would say anything that is not going to be a return on investment that you can actually see that return in there, that might be a bad decision. So good things are going to be home improvements. Home improvements are going to be there, building the value of your home, of course, making that equity even bigger. If you put that kitchen in there, and that maybe that summer kitchen out there, maybe a pool, the value of your home is going to go higher. So you are investing in your home, and that value is going to go higher. That's going to stay in your wealth. So whenever you sell that property, you're going to get all that money back. But using the home equity line of credit to go, I don't know, I don't want to say anything that might be perceived as somebody likes to do that, but I don't know. I'm thinking about betting on something. Maybe I want to bet on the Celtics finals. I don't know. It doesn't feel that is a good decision. So I will say stay within the fact that you can actually invest in something that is actually going to create a better wealth and a bigger wealth, or maybe build on the equity of your home. So very commonly, home improvements, buying a car might be there. I'll be honest with you. I've seen so many clients actually exposed to higher interest rates on cars, or maybe on RV. There is a big price on RVs, and people are looking. So many of our clients do have that RV life of plan part of their life goals. So if it is maybe $100,000 RV and the rates are going to be 22%, if you want to finance that one, maybe getting a home equity line of credit will be a better option to buy the RV. It's going to be a cheaper rate for sure.
Great information. And lastly, before I let you go, I always ask all our guests, is there anything that I didn't ask you that you want to mention before we get out of here?
Think about the great things that Bank of America has done. Again, the what do you want the power to do? So having our advisors inside a financial center all across the region, so including East Central Florida, and everything in between. Go to your financial center. Our financial centers are equipped with a lot of experts and advisors, and we're going to be happy to see you there. And we can engage into a deeper conversation about what actually keeps you up at night. What are your life goals? And whatever those are, we do have the tools to actually help you achieving those goals. So go visit us inside a financial center. Go to bankofamerica.com. Visit all the tools that we have there to provide you the power of knowledge to actually have a better financial life. And hopefully we can meet out there in a financial center. I'll be happy to stretch your hand.
Well, that sounds great, man. Well, that's a great way to wrap it up. John Javier, Vice President and Lending Market Leader with Bank of America, Central Florida. Thank you for spending some time out of your day with us on this Sunday. Thanks for coming on Black Minute Sundays and giving us this education. And enjoy your week, man.
Appreciate it. Thank you all.
It's a black man's Sunday.